Hey guys, this is Bruce Marshall with the nightly market update for Wednesday, May the 29th. So we'll get started here with the S&P, and as you can see, let me bring up the ticks. It was a very dull, quiet day. We just didn't have anything going on here really at all, kind of in another tight range. This week has been very light volume, very um, weird internals. There's a lot of, there's a lot of uncertainty, of course, in the market across the board. Let's go back here and look at this week, or the last several days anyway. So if you notice the white line in the middle here, this is our snow line at 28.30, and we were well above it here, 28.68. Now again, this is the S&P, and this is last Tuesday and last Wednesday, and I thought here we'd come up and kind of tested this skyline here and kind of gotten close here, and during this day, that was last Wednesday, a week ago. We just chop, and at this point, and I said in last week's video, I said that the path of least resistance most likely was a move here higher. Now we had a level back here we had to take out, and we actually did not, and we failed here and broke the snow line, and we really just, look at that, just laid right on top of that snow line for a couple of days here. That's Friday, and then Monday was a holiday, and of course Tuesday, and then yesterday we really started rolling over into the close, really came down today at the open, and we did a little bounce. That's positive, but we are in a we continue to be in a pretty critical point here. And let me back this out here and I'll show you. If we put this on a 1-year chart, of course we like to look at longer time frames here. We have come back down into the 200-day moving average. We do have a skyline there at 27.61, and we're kind of sitting on it. And if you listen to the videos I've done the last couple of weeks, I had been thinking, just following the same trend up. You ride a trend until it changes, right? Higher highs and higher lows, and stair steps up. The old saying, stair step up, and then of course elevator down, like that. Well, we hit the all-time high here. We took the L1 out here. We hit the all-time high, and then immediately came back down. And I thought we'd probably a pretty good chance we get a bounce there. We got a little one, and it failed. And we came down. I thought that snow line here would hold, and we didn't. It failed, but we did get a bounce, and came back down here, and another little bounce, and then this just kind of gave it all back right here, and now we're sitting on the 200-day, which, by the way, the Nasdaq is actually sitting on the 200-day moving average as well right now. So we're at a point where the markets, the indexes specifically, need to start showing some signs of support here. And I think we will get it. We have to be obviously very cautious of short covering and so forth. But the backdrop of that is that negotiations on the China trade deal don't seem to be moving forward. Last couple of days, that's really hurt, and because of that, global growth concerns and how long is the tariff war going to go on and all that kind of stuff have led to money pouring into treasuries, which spiked the prices up and the yields down. So then we're getting an inversion in the yield curve, and that spooks everybody because that is sometimes an indicator of recession. So you can extrapolate that down as many levels as you want to, and everybody sell everything. The recession's coming, all that kind of stuff. I don't think that's the case, at least not in the short run, because I think a deal will be either a deal or the perception of a deal or a perception of progress, or actual progress will be made. Both sides want a deal, but we knew this was going to take a while to all play out. So I think there's a lot of noise behind the market. Of course, we have to be very careful here. I continue to be really light on the number of positions. I've only got 3 or 4 positions on and a lot of cash, just kind of waiting and watching. I would show you levels, but they wouldn't really make a whole lot of difference, I don't think, at this point, because we had, I had a lot of levels through here, and we just kind of went right through them. So, unfortunately, the biggest level down here is our fire line at 2650. That is kind of on the table, I suppose. Obviously, I hope we don't get there, and I hope we kind of bounce and go this way. And if we do start bouncing, that will start short covering, and then this thing could get really moving on the upside once again. But I think probably, well, not probably, we all know, you can just look at this, the gains for the year have already been made here. Even if we do get going again, this percentage gain is going to be, minimal compared to what we've already had over here this year. And we could pull back, if you do the just a fib retracement here, a 50% retracement gets us back down here, and that's, fairly typical. So all that being said, I am I put a hedge on when we were at higher prices. I think I told you guys last time at the last update. I've got a butterfly at 2750 on the SPX. It's working fine. So I'm kind of indifferent. Not indifferent, but I will play the bounce if we bounce. I will play the bounce bullish, and then I will kind of reposition more hedging on the downside as we go. And but I'm not just closing everything and hiding, because I think we're going to tailspin down from here. I don't think that's the case. Again, you always need a catalyst, and it will be either media coverage of China, trade war going good or going bad. So we really could go either way. We've been saying this for the last, really since, up here at the at the top up here, because all this is driven by the Fed and China, and everything's great. And then all of a sudden, well, is everything really great? And so for the last, month or 6 weeks or so, we've had, we could go either way, up or down, and we've seen we've kind of gone both ways. So be prepared on a bounce for this thing to possibly keep going down. But I think, it will be news driven, whether that's the Fed, maybe talking about rate cuts if this gets bad enough, or progress being made on the trade deal or whatever. The bounce up here can be very quick and very vicious based on short covering. Not so much people are running in to buy. It'll be short covering that starts that rally. So anyway, again, all that being said, trade light and trade on shorter time frames. I'm trying to be nimble in this market. I am trying to sell premium around here, and that being call credit spreads, put credit spreads, iron condors, things like that on the indexes and on some stocks as well. That's working. We do have some elevated vols. That's a good way to do it. As you can see down here, got elevated vols here to be selling into. So do that, but don't do that. Don't overdo that. That's a really good trade right now, but just use it sparingly, put it that way. So anyway, I hope this helps, makes sense. There's not a lot to do other than to kind of sit and watch. We got light volume. We're summertime doldrums right now, so be careful out there for sharp twists and turns that you don't see coming. And once we get more into a trending market, we'll start pouring some money back in and get things going again. So hope that makes sense. Hope that helps. Have a great rest of the day, and I'll talk to you at the next update. Thanks.